You're listening to Life with DJ Sessions right here on WCSUFM.org.
Welcome back to Life with DJ Sessions. My NMLS number is 271823. Today's episode, we're going to talk a little bit of glossary of terms, right? And I know that as we're going through lessons, sometimes we hear words and it's good to know some meaning behind them. And so I'm going to just kind of go through a couple. And this is starting with affordable housing. You hear that term out there. The definition: housing that costs no more than 30% of the household's income. This term does not refer to a specific type of housing or subsidy, but rather is a relative term based on what different households can afford. The goal is to provide a range of housing with options that are affordable for all income levels. And it's the definition of affordable housing. AMI stands for area median income, and is how the federal government determines how much money a household can make to occupy an income restricted housing unit. I know a lot of programs are built around AMI, and so if you're at 80% AMI, 50%, and that's, you can Google that, but it's the area income and where you live. Appraisal, right? An assessment or estimation of worth, value, or equity of a property determined by a professional and used by lenders. CDBG, the Community Development Block Grant provides annual grants on a formula basis to states, cities, and counties to develop viable urban communities by providing decent housing and a suitable living environments, principally for low and moderate income persons. That is CDBG. CDFI, I know that term is out there. CDFIs are specialized financial institutions that provide financial products and services to populations and businesses located in underserved markets. CRA, Community Reinvestment Area, an economic development tool that freezes tax values for vacant land or buildings, typically for 15 years to encourage development. There's CRA areas. Displacement, when residents can no longer live in a certain neighborhood due to increased housing costs that are no longer within their ability to pay. You hear that term displacement out there. Down payment assistance. Down payment assistance provides borrowers with money. Typically, they do not have to repay to pay for the required down payment and closing costs associated with purchasing a home with a mortgage. That is your down payment assistance, DPA. Lots of different versions out there. Eviction. An eviction is the court-ordered removal of a tenant from the property where they reside, typically for non-payment of rent, damages, illegal activity, or violating the terms of a lease. Fair housing, right? You hear that term out there. Fair housing is the right to choose housing free from unlawful discrimination. Federal, state, and local fair housing laws protect people from discrimination in housing transactions such as rentals, sales, lending, and insurance. FMV, fair market value. Fair market value is a legal term defined by the courts as the most likely price which a property could sell for if advertised on the open market. Forgivable loan. Forgivable loan is a form of loan in which its entirety or a portion of it can be forgiven or deferred for a period of time by the lender when certain conditions are met. And then you got GDPM, which is the Greater Dayton Premier Management Public Housing Authority in Dayton. There are housing authorities throughout the country. Halfway through, gentrification. We hear that term out there. When a neighborhood changes as more high-income people arrive, gentrification may or may not result in the displacement of existing residents because housing prices rise but likely means that the cultural composition of the neighborhood will change. HCV, Housing Choice Voucher, also known as Section 8. Voucher holders pay no more than 30% of their income for rent, with balance paid through the housing authority. Those are across the country. Home housing opportunities may equal federal dollars allocated to cities to support the development of affordable housing. Hot market, a neighborhood where housing costs are rising due to increased private market activities such as home sales, owners reinvesting in their homes. HUD, Federal Government Department of Housing and Urban Development. Land bank, I know we hear that term out there. Land banks are quasi-public authorities created to acquire, hold, manage, and sometimes redevelop property in order to return these properties to productive use to meet community goals, such as increasing affordable housing or stabilizing property values. Typically, they acquire vacant, tax-delinquent properties that the market can absorb. That's interesting. LIHTC, which is an acronym for Low Income Housing Tax Credit, a common financial tool to build affordable housing competitively applied for by the developer. Interesting. Market rate housing, right? So you've got your market rate housing. Market rate housing is housing that already exists or is a part of a proposed development, and the costs are associated, the costs are based on existing area market values and demand rather than relying on any kind of subsidy or government assistance. Then you've got market value. So so the last one was market rate housing. This one's market value. A little tongue twister there. The price a property will actually sell for. There you go. That's the market value. I like that. Mixed income housing, right? So you got mixed income housing development includes diverse types of housing units such as apartments, townhomes, and single family units for people with a range of income levels. NOAH, N-O-A-H, naturally occurring affordable housing. Interesting. I have not heard of some of these acronyms out here. Inexpensive housing that is not subsidized by public dollars. Poverty level, a measure of income issued every year by the Department of Health and Human Services. Federal poverty levels are used to determine eligibility for certain programs and health benefits. That's a definition of poverty level. Got about 4 more here. Rent burdened, when a person is paying more than 30% of their income for rent. Subsidized housing, housing where there is some kind of reduction in the price to the occupant because another entity covers a portion of the rent/mortgage, usually a housing authority or nonprofit organization. Subsidized housing. That's interesting. I didn't know that either. TIF. I've heard that before. Tax incremental financing, or TIF, is a geographically targeted economic development tool. It allows the increase in property taxes resulting from new development to be invested into public infrastructure improvements or back into the development project itself instead of sending it to the government that would usually collect it. That's good. The TIF. I like that. Warming market, a neighborhood where market activity is increasing, but home values are still low. That's interesting. We got a warming market there. And then weak market, finally, a neighborhood where there is very little market activity, such as home sales or rehabilitation, which depresses home values, meaning owners have little equity that they can reinvest. All right, so those are the terms there. So hopefully you guys walked away from some lessons. I know I did. I know some of those I knew, some of them we had heard out there. But thank you again for taking the time, and until next time.
You're listening to Life with DJ Sessions. Special thanks goes to Wade Oberlin of OnOurOwnRadio.com, Charles Fox, K-Divas Music Media, and the BDG Network. For more lessons in financial empowerment, stay tuned right here on WCSUFM.org for more Life with DJ Sessions.